Now let's get to hear from some experts in the financial services sector during a panel discussion session, which is called the Guru Panel. It's a CXO Champions League. And the theme of this panel is, are commercial and retail banks disrupting the disruptors? Are neobanks actually the disruptors, or are they, your partners in crime, or are they, as Shan did mention, that it's co-opetition. So this panel on the Guru Panel, are commercial and retail banks disrupting the disruptors? It will be moderated by Mrs. Althea Davis. Althea is the managing partner and the chief data officer for Avantologie, our supporting partner. And she is also the editorial board member with the CDO magazine, and she's the country ambassador for the UAE and a board member at the International Society of Chief Data Officers. Her panel includes our conference chairman, Mr. Akshaya Gaur, the senior director for digital transformation and technology at the Partnerships Advisory. We have from McKinsey and Company, Yassine Sekat, the partner. He's joining us from Morocco for this session. And if I'm not mistaken, from Beirut, Lebanon, we have Suleiman Barada, the senior advisor and the head of UBA Digital for the Union of Arab Banks. Our community partner, the UAB Digital, he is also with us for this session. So, ladies and gentlemen, I would like to request you to turn on your cameras. In fact, my panel has their camera on. You may unmute at the time when you are given an opportunity to speak, and Althea, over to you. The next 40 minutes belongs to you and your panel.
Great. Thank you so much. Thank you so much. Well, welcome everybody, gentlemen, distinguished gentlemen, to the panel today. Really looking forward to a lively discussion with you. All of us calling in from all over the world. Greetings from Abu Dhabi. I'm always upping the UAE. Greetings. So let's start. We've got a bit of time, and we'll try to make the best use of it and allow the audience as well to get involved and challenge all of us. So starting off with question 1 of 5. And I'm going to point this question to Yassine. Is that okay if I point that question to you? Question number 1. Yassine, are you there?
Sure, please do.
Okay, great. Hi, Yassine. I couldn't see you. Just wanted to make sure we're good. So Yassine, are the retail and commercial banks having a hard time responding to disruption?
So thank you again for having me on this panel, and thank you for this great question to start. I will try to answer this question, which is an important one to start discussion. However, probably we need to, and if I may, I will allow myself to be very direct and frank on this question, and say exactly what I do personally. To answer this question, there is a first part: is there real disruption today in our markets in North Africa? And I have to say that personally, I don't believe today there are disruptions in our banking world. Can you please tell me how many neobanks or fintechs do you see today in our countries and really threatening or being able to gain some market shares from the established players? The answer is almost no. There is no banks being able to do so. But to be honest, and of course, I have to mitigate this response depending on which country we are talking to or about. But as has been said earlier, Egypt is probably in North Africa a little bit more advanced. We are seeing a much more dynamic fintech ecosystem, and some of the banks there are trying to see some potential disruption coming in the next years. Tunisia, maybe also we are seeing some good fintech ecosystem, but to be honest, on the rest, I have to say that the fintech ecosystem is really at the very early stages, and we don't see today a real disruption. So I'm sorry for being very honest today, but we have in front of us big, important banks who are in a comfortable position because of the regulation and other constraints. They don't feel today any pressure to move faster or not enough. So my overall response is no. I don't believe today that there are there is a real disruption that is threatening them or pushing them to action. This is my first answer.
Right.
Two is, however, true that we are seeing in these countries some traditional banks that are a little bit more aggressive in offering better digital services, better offers, who are really ready to maybe change their model, innovate faster, recruit better talent, and come with more innovative products. These one, we are seeing, and this is, I think, a fantastic element. We are seeing now, we do have enough space and time to see that these banks have been able to perform over the past 5 years significantly better than the others. And what I can tell you, what I see from my clients, that they are starting to see a threat from these small banks that they were almost not considering 5 or 10 years ago, which they see today, they are starting to have better results, better growth, better profitability. And in that case, yes, I say, wait a minute, this was a small bank I was not considering. They are starting to have so many new young clients that we didn't see before. And this is then pushing the traditional banks a little bit to hurry up and to speed up their pace into transformation. I have to say, however, this is not an easy to do for a traditional bank, being able to transform its operations, its back-end systems, its processes, its organization, its culture, its IT. This is a big task and a big move. So some of them are really putting some real effort to transform it, to little bit catch the pace of smaller ones, which are more agile on that direction. And this happens. The result is that we are seeing more and more new apps that are starting to be better and better. We are starting to see new journeys in terms of onboarding, in terms of lending processes, in terms of savings that are better and better. But I would not call it as a real disruption today. They are a little bit increasing their operations because they are starting to feel less pressure, but I would not call it a big transformation. And this will be my last point, if I may. However, my third point is that I still really believe that there is so much to do. The potential of improvement is humongous among the traditional banks, who can really work on the way they work with payments. In North Africa, we don't see mobile payment happening yet, which is absolutely the case in West and Sub-Saharan Africa. So in payment, there is so much things to do. In remittances, in banking the unbanked through new models, through distribution models. In terms of lending, we see SMEs, we see so many, only less than 10% of retail populations have access to credit. Remaining 90% are still open, but we are not able to offer them this right way of doing it. So the potential is humongous, and this is for me the disruption that we may be expecting in the coming years. So this is my overall answer, no, but there are some small players that are threatening the big one, pushing them to actions, and I still believe that the area of improvement is still massive there. Thank you.
Thank you very much. So in a bit of summary, the hard times of disruption is still to come. Based on your answer. Maybe some of the other panelists would like to have one little quick, yes, I see a finger, action. Yeah, go ahead.
So I completely agree with Yasin in terms of the enormity of the task. But big trees grow out of small acorns, big oak trees grow out of small acorns. And I mean, I speak about India.
Yes.
Paytm, you might have heard of it, started off as a small company, payments, enabling payments. And today they have 350 million users. They have a Paytm bank, et cetera, et cetera. It's a large company. So I completely understand the difficulty of kind of starting in North Africa and kind of building up the core payment facilities, mobile payments and things like that. But to me, that in itself is a disruption. Because my view is that disruption will be made possible more efficiently not by banks. It will be made by entities, by either telecom companies or startups or combinations of those. That's my view.
Thank you. Thank you very much. Thank you, gentlemen. I see other people wanting to hot up in there, but we're going to move on to the second question, save a bit of time. So, gentlemen, how can retail and commercial banks design an innovation engine which will enable them to explore the future while managing the core retail product business? And I'd like to start with, I hope I pronounced this correctly, Soliman? Is that correct?
Yeah, there couldn't be a better way.
Oh, okay. I have to excuse my intonation. Sorry.
There couldn't be a better way. Thank you. Althea. I'm very pleased to be on this panel. I'm very honored to be part of the Sixth Africa Bank 4.0. It's really a pleasure being part of this conversation that is focused on the African continent. And without any further ado, back to your question. and I'm gonna be a little bit sneaky and bring some of the first question into my answer to this question. So because more or less they can both be related. I think and a little bit of background on my capacity as the head of UAB Digital. Within the Union of Arab Banks. So the Union of Arab Banks quickly is the representative association of the Arab banking sector in the 22 Arab states. So our ecosystem and member base spans the entire geography of the Arab region. And the reason why I'm saying this is to really add some more context to the opinion that I will be contributing with. It is really coming from the fact that we have been ever since the inception of UAB Digital, which is the ecosystem digital transformation arm of the Union, in April 2020, we have been really in very close and constant conversations with most of our members across, the entire Arab region. And the North African part is certainly an essential part of our ecosystem. So if we look at the North African part and the developments that have been happening in that part of the world and in that part of Africa, we certainly, and back to Akshaya's, earlier statement in the opening, where there are countries that are making progress, that cannot be, that cannot go unnoticed, like Egypt, Tunisia, and Morocco. So there is definitely progress. From my conversations with the rest of that North African part in Libya, Sudan, and other, there is certainly strong determination. So I have to convey this sentiment to you all, being really aware of what's happening, of the dynamics that's happening, and the developments that are at least starting to happen in those countries. Back to the question of whether commercial banks and retail banks are reacting to it in the best possible manner, and whether they can establish the right innovation engines. It's really, in my opinion, it is going to be driven in every jurisdiction by the socioeconomic motivations. So you will see in certain countries progress on the front of inclusion, and inclusion-driven progress and developments around fintech, whereas in other countries you will see other causes really pushing and helping move the needle. There is no question whatsoever that the North African continent, at least the commercial and retail banking side of it, is pretty much convinced that and aware that this disruption is actually happening. And in my opinion, it's only one round of disruption. Okay, so I'd really like to mention that what we are going to see in the next 10 years to come are multiple ways of disruption. Why? Because we are going to every year innovate for a newer generation that are now joining the banking system. So, and those generations that are yet to grow and become eligible for banking, and financial services, their demands are fundamentally different from our demands and the demands of the current generation that is banked. So let alone the unbanked from our generation. So for these retail and commercial banks to establish the right engines, they need to start with customer centricity at the core of that development. And without doing so, there is great fear that investments and efforts that are being put or will be put on that transformational move is actually going to be at risk of loss. Anything that doesn't take the local country's context and the socioeconomic motivations into consideration while innovating these new products, financial services products and services, may end up with an irrelevance. And any product and service that is going to be innovated within these innovation engines or labs that doesn't take into consideration the sustainability or the sustainable development goals, particularly in Africa, is also going to face problems with its scaling. One last point on those innovation engines is certainly there is the engine, there is the oil for that engine, and there's also the operators of that engine. What matters the most, in my opinion, is an upskilling of the manpower, of the brain power that has to actually operate these engines and to continue to modify the configuration of that engine, mechanically speaking, okay? So that it really delivers the intended outcomes and it leads to the production of the right financial services and products. So an upskilling mandate is certainly necessary across the entire ecosystem. From what I have been observing so far, that is still under, the upskilling cause is still understated. It hasn't been attended to enough extent, and that is going to hinder the progress.
Hinder the progress.
Sooner rather than later.
Right. Thank you so much for such a thorough and comprehensive answer. I mean, you've given us a lot to think about. And I would like to add one thing to that. It's not just the technical upskilling, it's very much the data literacy upskilling as well. So I have to put my torch in the fire there for data because, we're not going to come out with the right, like you said, products and services if the data richness is not focusing on wide enough a scope of relevancy in order to produce that and have those men and women, lead the way and keep on learning. So thank you very much for that answer. I'm going to try to not butcher your name either. Akshaya, just somewhere in the vicinity. Okay. May I ask you? Go ahead.
Yeah, a rose by any other name is still a rose and smells sweet.
It's still a rose. Akshaya. Akshaya, I have a third question for you, and it's building on what Suleiman just mentioned. So how has the innovation and digital transformation accelerated due to the changed behavior of consumers, the clients that Suleiman was just speaking about? Please tell us your opinion on that.
Sure. So it is a well-established fact that in this information age, our attention span has reached the levels of a goldfish, which is not good.
No.
So everything is instant. I've had the good fortune of starting my career when I had a secretary who would take a dictation and type a letter and to bring it back to me, corrections, etc., that iteration. Today, an email comes, and if I don't respond in 15 minutes, I get a phone call. If I don't take the phone call, then I get another, WhatsApp message. You haven't responded. So the pressure of time is a big factor in impacting customers and their needs. That's one thing. The second thing is that today the options that are available, banks kind of gloss over it, but with the competition, I mean, in your geography, Althea, I worked in UAE in Dubai. There were 52 banks. The competition was intense. Margins were under huge pressure. So people then had almost a way of saying, so far you ignored me as a customer. I've had to make appointments with my relationship manager, forget the branch manager, to have a conversation. Now it is my turn to dictate what I need. So that's the second issue. The third issue is that, the various generation X, Ys, and Zs, and I have a generation C as well, which is a generation connected, which is age agnostic.
Okay.
So with the younger generation, the millennials, call them what you may, they have got used to the applications that give them instant gratification.
Right. Instant.
And it's absolutely instant. So they are saying, actually, my daughter actually asked me, how come you work, why don't you just, join some small startup and, kind of create what she calls funky applications. So the point is that the whole ethos is changing. And now Generation C gets born without any age gaps because my grandchildren are at a different level altogether. And to communicate with them, I have to learn their experiences. Learning their experiences, I say, this is funky. And I also want it. So simplicity, time, all these factors are extremely, extremely critical. And the desire to dictate what should be a banking solution is affected by all these factors.
All the factors,
And there are some people in banking who suddenly have realized that the customer experience is important. And, not necessarily the convenience of the IT team in the bank or the business saying, this is going to cost too much. Let's just, let the customer suffer. I mean, they don't use those words, but that's
more or less that's what they mean. We've all been there.
The intent. Not the intent. Sorry, it's just the outcome of
things.
Thinking through. So I think all these factors come together, and they change the whole paradigm of customer experience.
Right.
You would hear about user journeys.
Yes.
Right. So, I've worked in banking tech for so long, and user journeys was never taught to us.
No.
We never knew anything about it. So I think that's what is impacting all this.
Right.
And then you come into the world of innovation, and which banks do with great difficulty, because banks are focused on process. Process is God.
Yeah.
Not the customer experience. So they find innovative ways of handling process. Whereas what we should be looking at, innovative ways of looking at
handling customer.
Yeah. Sorry, I for bankers over here, let me clarify. I'm also an ex-banker. So this is as much self-criticism as anyone else's.
Thank you very much. Thank you very much for your answer. And I think it's really something for us all to reflect on, because we're living it, we've contributed to it, and we've also contributed to the change, the paradigm change as well. So, and I want to go back to Yassim, and I wanted to ask Yassim a question related to what you just said. You mentioned, for example, not what's convenient for IT or not what's convenient for the business that says, oh, let's just, let the customer suffer it. So those are stakeholders. So Yassim, why is it significant to get your stakeholders excited about innovation, you know, both in the bank and outside the bank? Why is that?
Yeah, sure. I believe there is, I have been working with, over the past 6 years, deeply with banks on the ground in transforming their journeys, just as has been said. They're not processes. I fully agree with you. And I have been through end-to-end this process of transformation. I believe there is something that we don't say enough, is that it's easy to criticize, right? Banks are, oh, you're not moving fast enough. You are happy with your situation and so forth. The truth, and something that we don't say enough, is that being successful in a digital transformation is difficult. This is hard. This is extremely hard.
Yeah.
And I will tell you why in some seconds, but given how hard it is, if there is not a very strong interest, motivation for people who will be involved in the transformation, I can tell you, you can design, you can develop the best journey ever, the best product ever. It will never be implemented, and it will never have success. So, and if you look at, as it has been said right now, what does transforming a journey looks like, you see that there are pure back-end processes that we need to change. There is frontline operation we need to change. There is regulation we need to challenge. There is IT processes we need to do. There are risks we need to cooperate with. There is client we need to convince. So if you look at all the chain and all the things we need to transfer in order to be able to successfully in a journey, the task is amazing. And at the end, if we are not obsessed by one question, is for each stakeholders, what do I get from this? What do you have for me? What do I win by implementing this new transformation? By doing this transformation, I can tell you this will never happen. So this is why having all the stakeholders, all of them, in IT, to what extent exposing your API will significantly decrease the burden you have on your burden. In conformity, how can we involve them very early on the process to co-create with us, and not at the end to validate something that has been done for the past 6 months? For the people on the ground, how this new process will decrease the administrative workload and give them more time to work on what really matters, advising the client. On the back end, how this new process is decreasing the work, simplifying, and decreasing the repetitive tasks that can be completely automatized. So if we don't have an obsession of all the stakeholders, what do they get from transformation? You can design everything, you can develop, you can code everything, but this will never happen. Again, in a world where we do have existing processes in the past and not new one that we built from scratch.
True. You're so right. And we've all been there on this panel. We know we have our war wounds, right? It's incredible. You know, thinking that you're going to force somebody to do something is just insane, you know. But absolutely. So if we, closing off, because we want to give the audience some time to ask us some questions, and we have some questions coming in. Solomon, I wanted to ask you, what is the right matchmaking formula to bring prosperity and growth? Ooh, that's a big question.
That's a very good question.
Anybody want to help him? Kumbaya moment. Go right ahead.
That's a big question, but I have. Sorry, Yassine. Yassine, be my guest, so you can interrupt me if you want to contribute anytime. But really, it is definitely a big question, but it's super relevant, Althea, and I was so happy to see this type of question being raised on the panel, because it really takes us to, as my fellow panelist Yassine has just mentioned, and Akshaya also earlier, what really matters the most. And we have been seeing a lot of the matchmaking dynamics in the past 5 years, plus or minus, none of which has really come to the right level of fruition, to be honest. But to address this question, there is matchmaking between the provider of services and the end constituent, okay, the consumer of that service and product. There's also another matchmaking that is happening within the industry between the providers of technology, the fintechs sitting on one end, and the incumbents also sitting on the other end of the market, and also trying their own innovation efforts. So there are multiple matchmakings in this era. Okay, so let me start by addressing the matchmaking between fintechs and incumbents for the greater good of everyone, right? And not only between fintechs and incumbents, but also between fintechs and incumbents and any other provider of any component of a solution that could actually serve the best interest of the end constituent, which is the consumer of the financial service. We have been seeing a lot of examples and a lot of models, matchmaking models between the two worlds. And from my own learnings and observations, I think what would really make this matchmaking look more of a matchmaking and less of a match faking between the two worlds is actually when you bring the best of the two communities together into a cohesive proposition that can actually fulfill the actual demand. At early stages of developments in the fintech dynamics in our region and in Africa too, innovators went into, they rushed into innovation without understanding what really the actual demand is and the actual need is, and whether that demand is really relevant to any socioeconomic situation within our region, to every constituent, and how big that demand is, and how much we can really scale with that proposition. Okay, so then we started to see fintechs suffering after a lot of efforts and a lot of sweat that has been put into the innovation phase of their ventures, right? And at the same time, we have been seeing very disappointed, customers that are still waiting for the end result of this whole dynamics to come to them and provide a better way of banking or a better financial service. And the third component, the banks have been struggling to get their heads around, where to start innovating from. So certainly the best way around it is for fintechs to innovate around the capabilities map that they could actually develop for the financial services ecosystem, and they try to be deliberate enough in addressing those the gaps in the map, right? And also for incumbents, they need to understand what capabilities are out there, not just by following the news of fintechs and reading what's happening out there, but they really need to become more granular and more disciplined in understanding the breadth and width and sheer propositions that are coming from the fintechs, and they need to attempt at mapping them into the gaps within their institution. That is not happening yet. What is happening really are conversations at the surface or innovating in a box, but not really something that is
not connected.
Yes.
Yeah. Okay, thank you very much for that answer, gentlemen. We have to rush to a question for Akshaya. I have one question, and I've been told that from a timing perspective, we need to wrap it up. So let me just read the question. It says, the question is from the floor. Akshaya mentioned during his keynote, fintechs and banks have the difference with their processes, since banks have to follow strict processes to fulfill a task or service. does that mean we will not see banks in the near future? Question. If that is the case, what is the future of neobanks? Aren't neobanks also banks, or are neobanks a glorified version of a fintech? Your thoughts, sir?
Okay, so the whole story is that firstly, neobanks are banks. Okay.
Yeah, that's
okay. But there is no rule that if someone has been operating that, if someone has been operating in a particular way, they won't change. Mm-hmm. I was CIO of Mashreq Bank. I can tell you from my personal experience that there was a lot of change within the organization to think differently.
Yes.
The new bank, from a business perspective, was almost like an independent entity. Obviously, the overall company and its shareholding had accountability, but it was operating like a fintech, but being a bank. Okay,
got you.
So you get people. You have to change your organization, culture, mindset. The whole 9 yards have to be, and it's a massive change. And I can tell you that we started this journey before 2013, and it wasn't a kind of a straight line. Here's the checklist 1, 2, 3, 4, 5. We came up first with a mobile solution. We came to a point where 80% of our inputs were coming electronically. But guess what? Like Yassine said, they were falling off as pieces of paper in the back end, and then the end processes were being rekeyed and stuff like that. So we learned.
Yeah, you learn.
And as we learned, there were people who actually understood it, and that's where the culture change started happening. So we experienced things like our customers and realized how difficult it was. So when I say that the processes are different, what I meant was that is what traditionally the processes have been.
Right.
Yeah.
Right.
So any one of us, as a 19-year-old, would follow different processes as we follow now, because we've learned and we've changed. And it's the same thing with banks. So banks is a little tougher because there are lots of people in there, and the culture and organization change is very difficult.
An establishment of over 400 or 500 years doesn't change that easily, right? So,
if you allow me, Althea,
sure.
I'm going to be very quick. It really takes establishing an ecosystem around an institution, regardless of whether it's a bank or a neobank or a fintech or even a central bank. We are in an era that requires the extending and going beyond the boundaries, the traditional boundaries of our institutions, in order to thrive in the digital era. Those who will fail and who will stick to their original boundaries will actually, yes, go out of business. They will disappear from the future of banking. But those who actually succeed at creating these ecosystems that allow them to still be competitive and relevant will actually win and thrive, whether they're banks or any other institution of any nature.
True. I mean, in my consultancy, we often talk about, for banking 4.0 to be data-centric, you need to be a servant mentor. Educate the people about finances and create organic market instead of pushing people out of banking. Embrace them and bring them in. One last question from the floor. How are digital banks?
Sorry to interrupt.
Sorry. Go ahead.
I would love to add something also, and I think something that we are not pointing out enough is that it's the role of regulation. Regulation plays a major role for fintechs and neobanks. And to be honest, if the regulation of these countries in North Africa are not changing the way they see neobanks, and they keep protecting the banks, established banks as they are, there are also chances that things will never change, to be honest. So the regulators also major role into accelerating the pace.
Understood, absolutely, because that's the reality on the ground. Thank you. Then I have this last question. Sorry, I'm just trying to open it, gentlemen. For some reason, it's not. It was something about digital. There we go. Digital banks drawing a fine balance between their legacy core systems with latest technologies to fast track products delivery. I think they're just talking about the balancing act. Which gentleman would like to take that question?
Happy to take this one.
Okay, please.
So what's happening actually with digital banks is that not only they do have the willingness, but they do have a new operating model. They are heavily investing in new IT systems, and the way they work is completely different. And for me, this is something that is absolutely crucial to make a transformation happening. Something that many organizations I work with are calling agile, but unfortunately, more than 2/3 of them don't really apply what really agile means in terms of methodology. So having this operating model, having a cross-functional team, having a real role of the business in defining and designing the product, being able to work with business and IT in an efficient way, being able to modernize also the legacy system, building the API, having the middleware, these are critical recipes for making this transformation happening. So yes, this is a balance, but this balance can only be achieved through a real operational model, a new one.
Yes, to renewing. So renewing, reshaping, yes. Okay. Gentlemen, Fad is looking at me very sternly, so I must close the session. I feel like a belligerent child right now. I hope I've taken the gentleman home. Fayed, back to you.
Thank you, Althea. Thank you very much. Thank you, Akshaya. Thank you, Suleiman. Thank you, Yasin. Ladies and gentlemen, that was the group panel. We will hear from Suleiman, Akshaya, Althea, and Yasin again later on in the conference. Yasin has a presentation tomorrow. Suleiman, Akshay, and Althea, they will join a panel discussion tomorrow, which is on digital leaders, that is moderated by Akshaya Gar. And later on in the afternoon, Akshaya will be moderating the payments panel. So with that, that's the Guru panel. And